Alright, what's up you guys? This is Janos with Trading Spies. Today is Thursday, the 22nd of June. We had a great day on the account. Actually, it's a double-digit gain on the account. We traded 3 times today. 2 of them was a winner, 1 of them was a loser. But making these big gains today, it doesn't mean it was easy. It's a very choppy day. A roller coaster day with a lot of fake outs, so it was very difficult. So let's get in. Let me break down the trades for you guys. This is gonna be very interesting. Hopefully you guys gonna be able to learn a lot out of it. And again, as always, if you guys like the content of my channel and find value in the videos, please don't forget to hit the like button, subscribe, and turn your notification on. Alright, let's start our market recap here. And basically today we continued the yesterday choppiness on the market. And we continued the breakdown, not the breakdown, but a downtrend till today morning. And right away at the open, we found our support at the 433.60 level, which is so let me just show this one, right? So this is our major pivot low, what basically has to hold before really a downturn in place. This low is the FOMC minute day low, and that our major pivot low. Let's go to a little bit higher time frame, right? So in my point of view, if we would give up this level, then very easily we can get to the 432 level basically. And the reason why is because this very quick uptrend, it went on very low volume. So, and basically if we break this one, it's gonna come down very quickly, and then we have the 430 level again in place. But today morning this level was holding very well, and to the dot, right? We put a today low at 33.60. That day low was 33.59 for 33.59. So right, so we hit that level on the sweet spot, and then basically from there we had a very nice uptrend, 2.5 point. I didn't participate on the first leg of the trade, but then we had a very nice pullback, right? And even we can put a little trend line here, and let's just see what was my first entry. It was 10.04 and I added to it at 10.09. So let's just put our little arrows over here. So the first entry 10.04, as we started to go higher, and then I added an additional to 10.09. All right, so the reasoning behind this trade, we knew already from yesterday the 335 level is very important, and we rejected the first time basically very hard. On one single candle we dropped, and then we started to chop around a little bit. But as we moved higher, basically at this time this trend line wasn't there. So let me just take that off. as we started to move higher, we find our bottom basically, and the first candle make a new high. It was a very, very nice push. I didn't enter into this trade, but I took the next candle, and of course, as we reached the 435 level, we just rejected again. And when we had this rejection, we made a lower high. At that time, we can put, I don't want to stick, we can put our trend line, right? Where is our exit? What we can ask, right? The exit or the pivot low, right? This would be our original exit. We never reached, not even close. We never closed below. Even we can consider this one also if we want to put a tight stop on it. For me, this was the one. Even we wicked below, but we never closed. So if we go below this pivot low, this support level, we wicked below, never closed, justified a trade. And then as we moved higher from the second leg, I added to the position, right? And from there it just became a beautiful trade. As it moved higher, we broke the 435 or pivot high, and then basically as we moved higher, I believe on this single candle I exited actually, yes, basically on everything, not at once, but as we moved higher, I exited everything from here on this single candle. It wasn't really any justification. Well, justification, yes, we broke our pivot high, and for me, that is the sign, and that's what I'm taking my profit all the time. And from there, basically, we went higher. We retested the 436 level yesterday also. This was an important level. Let's just go to the 5 minutes so we can see. Right, this is our right, the 436 level. It was a major level, right? We came up to it, we rejected. We came up to it, we rejected. And even a very strong uptrend, we still paused right there before we shoot higher. So let's go back to the 1 minute. So we rejected that level very, very hard, and this is why all these becoming a roller coaster, right? It's very hard to predict what's gonna happen, and that's why we have to be very, very quick with our exit, and we cannot really play around, because these candles lately every single day are happening, right? Breakout candle, look at it, all these breakdown, crazy, another breakdown, jumping through 3 levels, another big rejection, breakout, same candle coming back. So it's very, very difficult to trade in this market environment, right? Because what we think it will happen, it's always an extra leg to it, right? If it's a breakout, it will happen eventually, and the timing is becoming very, very difficult, at least for me, even after all these years on the market. Second entry, let's talk about the rejection, right? At this point already we can put our trend line, right? Most touches, I put it right there. If I would leave it on top, would be no issues, but as we goes with most touches, and the way I see we really have to start to respect not the most touches, but the extreme highs week to week, right? Because if we go to candle and we try to reach our next lower high with our wick, right, we still, as we learned, the most touches, 1, 2, 3 candles and another high, we came up, we rejected, right? But if we go back and see, and it's not just the past few days, in general, we can talk about the wicks, the extreme highs and extreme lows. And I mean the extreme is the full candle, not just the body, the full candle including the wicks. And even if it doesn't reach the first or second time, eventually it will break out, but a lot of fake outs would be eliminated if we just keep it on the extremes. And again, I mean the extremes on the full size, not just the body of the candle. So in this case, I reduced it to the original ideas, and basically, yes, it gives us a lot of touches, a lot of rejections, right? So my next entry was in this particular week, and with the same thinking, right? We touched it, we rejected. As we came up, we rejected, we supported at the 435 level, and then basically we came back, we stopped, and the arrow is on the wick. And the thesis for my entry, we stopped, and then basically the breakout candle, which is already above our trend line, it would be justificate a breakout, exactly just the way it happened right here. But what it did, the moment it break out, it faked out and hardly rejected with 2 candles. And basically, as I entered, I exited right away, because we don't know, right, if it's gonna continue. But these 2 candles, from the entry to the exit, let me tell you exactly. These 2 candles, exactly 40%. These 2 candles. So from entry to exit, exactly 40% loss. And just talk about the extremes, right? And then basically we held our level, but at this time when I entered, we don't know, and we just cannot hold and hope. These already 40%, and what if we put another candle like this over here, right? Then we can add another 20-30%. Let me show you even better. What if we add a candle like this? This single candle, it's a 50 cents, a half a point candle in an instant. So this is not a slowly build up candle. This is as it opened, in an instant second was done right here. Same actually, these are same size candles, about a 50 cents candles, half a point candles. It's just ridiculous. Exactly this one too, right? Actually this is just 35, but you guys get what I'm saying, right? So we supported our level, and then basically my next entry based on the exact same idea. But at this time, I did exactly the same thing. As we moved higher, we reach our trend line, and then as we break that particular candle, I entered. That candle closed, came back. It's never broke our level, right? And then off we go. Then we went very, very nicely. The original idea was great, but the timing the first time wasn't good. And basically this particular trade, it's about 60% move. I sold basically everything up here. I was waiting to break this pivot. We couldn't. It didn't move higher, and basically I exited everything on this level. My last exit was at 1150, right? On is no particular level here. I think I exited actually 40, 40, 41, 42. As we broke 40, 41, 42, 48, and 50. 48 is the red candle, 49 and 50. So one winner, let's put our arrow over here, one winner, two winner, and the middle one. I know this exit was a little bit rushed. Well, actually it wasn't rushed because the drop, it was so sudden and a big candle, it took a lot out of the contract instantly. We had VWAP support. We broke below our pivot high, but we never broke our pivot low, right? So I could have stayed in the trade, but really it was just a very huge drop, and I didn't want to risk it to go further and retest or yesterday low level. So yeah, this was our 3 trades, and then from this point forward it very, very choppy. And then afternoon again we had an hour and a half straight run up with very, very little pullbacks, right? 20 cents pullback, huge drop, then we regain everything. But let's look at the 5-minute candles. The 5-minute candles, it's even a bigger mess, right? Let's look at the 5-minute candles, just covering each other, wicks on tops, wicks on bottoms, right? So let me erase the arrows, and then just let's look at all the fake outs, right? We broke out, wick, coming down, giving back almost everything, right? Over here we break below literally 2 cents, the market turns around. This was the other one, right? 3 candles, you moving up, and suddenly drops. Everybody expecting to go lower. This candle, the big green candle, opened red, right? Because the wick, as it opened, it originally it was red. This is our opening level. This is where the candle opened, becoming red, breaking the candle, breaking the other candle, we're getting lower, and literally getting higher. We holding that. Actually, this was very, very interesting at the moment as the candle was forming. This candle, the very next candle, give 90% of the huge candle back, right? So again, you're expecting the candle to break lower of this fake out, right? But what happens? No, it regains most of it and then heads higher. Same level as the original candle, right? Breakout, breaks out 20 cents, and then we're dropping like crazy, right? Coming down, moves up, wick higher, and then look at this, drops like a rock. Next candle, low of this candle, 43. Low of this candle, 43. We drop below 1 cent, and the market just goes the opposite way. So it's really, we have to be careful. And if you guys are rewatching the episodes, I'm talking about the wicks of the candles, days in, days out. We have to be very, very careful, and never, at this market environment, never enter of a candle break. That would be my recommendation. Wait for the pullback, right? Wait for the pullback. Let's do it here. Right? You're waiting for the continuation. Don't do that. Don't do that. Right? You wait for the pullback and then you enter. Same thing over here, right? Don't enter of the break of the pivot. What happens? Wicks below goes to the other direction, right? Same thing over here. That was my mistake. Breakout, instant rejection. So it's very, very difficult, the market environment. And let's not forget, right now we are summertime, so the general trading, the general volume is a lot less. So if we go, I would say past 10 o'clock, just stop trading, because then the most of it's computers, the AIs, algorithms trading the market and pinning it in, again, in this environment where you enter. Really, where you enter, you have one entry point, and again the actual break, right? If we put our trend line here, because we think it would go higher, yes, we have a breakout, but then again, our important level 431 there, wicks higher, come back, right? So again, that's not a good place to enter. This, once it worked out, right? And why is that? Because it's really no major level above us. Yes, the 436 full point, but really we're trading right by the high of the day at that time, what we retested once, twice, 3 times. Then we have a pullback, so it's a justification to enter into the breakout with a tight stop loss, right? But again, what happened? We had the breakout, we broke our high, right? We had a 20 cents move higher, and then from there we have a 70 cents, almost a point rejection. It's just a difficult environment, and please just take care of your account. Don't swing for the fences. Base hits, base hits, base hits. That's how you can safely build your account. Yeah, I'm watching other you know, YouTubers videos, and they talking, I don't say nonsense because it's understandable what they saying. And over here I referencing to, you have to leave runners, right? Runners, yes, but basically the way they saying, they suggesting not to take profit, because with the base hits you're not gonna build the account, because for 5 days you're making profit, and the 6 days basically you erasing everything with the big loss. And yes, that is true if you don't have a proper money management, right? And in that case, I understand. But for the new traders, and that's what you guys have to understand, for the new traders, the rules are different than for the traders who trading with a lot of money, who can throw money into the trades. Because again, the difference between the scaling in and averaging down, it's a big difference. I'm not going to get into it, but it's a big difference. And a lot of times when you hear them saying, oh, I was scaling into the position, 90% of the time, in my point of view, is not right, because you're breaking structures, you're breaking levels. And once you break it, from that point is no reason to hold, because basically you hoping at that point the market's gonna turn around. And of course, if you have enough money, you can throw money at it, and a lot of times it would work out, because the market fluctuates, right? It's like a wave. So it goes down, you throw money, you averaging down until you reach the bottom, right? Eventually when you come up, you close to the bottom or midway. But when you don't have enough money, how far are you willing to go? How much money you willing to lose before you give up? And that's the big difference between taking base hits with the very tight, not necessarily has to be tight, but with the reasonable money management, and do that day in, day out, or just throw money at it. And listen to this. And that's when you see really big days happening for the traders, right? Because imagine, I'm just breaking it down for you guys, right? You entered here for a breakout, right? Pullback, you entered. It's a valuable, it's a reasonable entry, right? You break to the new high, you pull back, you entered. But again, it's very, very short distance, you in the green, but it starts to pull back, right? It pull back, reach your level. Let's say, just let's calculate. With 10 contracts, you enter for the breakout, right? It pulling back, you have your support, right? Hitting your support level, goes back up, you adding to your trade, right? It doesn't reach a new low, but you're already in with 20 contracts. It's breaking down again, right? Breaking, retesting your pivot level, you adding to it again, right? 30 contracts. It doesn't work out. Rejecting, goes farther down, breaks everything. You have another level. Hold, you add to it. You're already in 40, 50 contracts from up here. And at this point, let me go to the options and let's just see where it is. So at this point, you would enter the 436 calls, right? So you break out over here, you entering with 10 contract, because that's the number we came up with, 50 cents, right? 50 cents, 10 contract. you were already up 10 cents with $100. That wasn't enough for a base hit. You average down. So down here on this level, you already down 30% of your original. Entered 50, down here is 35, it breaks up, you enter 40. It came back to your original price, 50. Right now you break even, you're still not taking profit because you're hoping it goes higher. It breaks down, right? How many times we say we average down? 1, 2, 3, 4, right? So that's how you get to the 50 contract. Down here, with this average down, you already down at 20 cents. So you already down more than 50%. You add to it. Down here, if you're holding it one more time and you add to it, the contract is only 5 cents. So you average down, right? Let's say to a 20 cents average, 25 cents average. Okay, I think that's reasonable. I'm not adding everything together correctly for sure. And if you make the calculated numbers, it will be a little bit different. But hypothetically, you entered and your 50 contract average is based on 25 cents, right? It pulls right back up. And basically, we closed, the high we closed at 60 cents again. So basically, with the 50 contract, you made 25 cents, right? You doubled your money, right? And that's how the big numbers add up. This is end of the day, but if you do this anywhere on the chart, that's how the big numbers happening with breaking the rules. Is not you entered, you holding, and it's to me, that's why it's very, very difficult to follow these YouTubers. And if you guys recalling, this is the reason why I opened my channel, because of this nonsense what I had to listen to day in, day out, being an experienced trader. But anyway, again, if you guys find the value in my channel and like the content and it's helping you with your trading, please hit the like button, turn your notification on, and subscribe. And see you guys tomorrow with a new episode, as always.